All right, welcome back everybody. My name's Austin. Bitcoin's flying right now. We're going up and up and up. So like always, check the timestamps down below in the description because I want to share you three of the most relevant cryptocurrency news stories, keeping you informed as to why we're seeing this excitement in the market. This first clip comes out of Bloomberg TV less than 24 hours ago from Chief Investment Officer Scott Minerd of Guggenheim Global. For perspective, Guggenheim is a global investment and advisory financial services firm that engages in investment banking, asset management, capital market services, and insurance services, and they have over $270 billion in assets under management, which is a big deal. Well, they just announced that was actually a few months ago in secret in the dead of the night, they took out a pretty substantial position in Bitcoin, and they didn't tell anybody until now. All this new signaling by the old guard is classic behavior. You want institutional adoption? Then be prepared. Guggenheim loaded up their private/internal funds when Bitcoin was at 10 to 15K, and they kept it quiet. And now they're going to ring the bell all the way to the top of the next cycle. Listen to this clip. Listen to their cycle price prediction they're about to make. The shock in the Bloomberg analysts' voices when they make it. But most importantly, why Guggenheim Partners decided to invest in Bitcoin. Watch this.
Of course, we made the decision to start allocating toward Bitcoin when Bitcoin was at 10,000. It's a little more challenging with the current price closer to 20,000. Amazing, over a very short period of time, how big of a run-up we've had. But having said that, our fundamental work shows that Bitcoin should be worth about $400,000.
Whoa.
So, we're going to, even if we had the ability to do so today, we're going to monitor the market and see how trading goes on valuation, but ultimately look to buy it.
Scott Minerd, we want to delay the Fed press conference for this comment by you. How do you frame a 400,000 Bitcoin? How do you get from where we are now out to 400,000? Is it just based on scarcity?
Yeah, right, Tom. It's based on the scarcity and relative valuations, such as things like gold as a percentage of GDP. So, Bitcoin is actually has a lot of the attributes of gold, and at the same time has an unusual value in terms of transactions.
Right. Mike McKee emails me, why are we talking about BitDog while we've got a Fed press conference going on? McKee, jump in here and save this Fed special.
You know we're going to get emails, Tom, from people about Bitcoin.
Very interesting. Like it, support it, get this information out to as many people as possible. But those Bloomberg news anchors, I think you could tell, weren't the biggest fans of BitDog, Bitcoin, whatever you call it. They were eager to get to the Fed press conference that happened yesterday. I want to play you a clip detailing the Fed's plans in 2021 to open up the money printing spigot even wider. Before we do that, BlackRock CIO this morning was asked about the comments from Guggenheim that you just heard. And as a reminder, BlackRock has $7.43 trillion of assets under management. And what did this channel, Altcoin Daily, always say? Once Bitcoin passes all-time highs, it will start receiving unbelievable coverage by the mainstream media. Watch this, BlackRock CEO. And by the way, this is a clip I pulled from somewhere. I don't know where those QR code Bitcoin addresses go, but good clip.
You led me right to it. If we're looking to diversify our investments, what about Bitcoin? We had Scott Minerd tell Bloomberg yesterday, Scott, say he thinks Bitcoin should go to $400,000.
So, I think putting a number on Bitcoin as a valuation is hard. I don't know there's an algorithm. I don't know. I just think, listen, I think there's a demand that outstrips supply today and particularly when you're seeing debt printing, not just in the U.S. and Europe and other parts of the world. So, listen, I think there's clearly greater demand than supply. I think storehouse of value, you're seeing it somewhat in gold today, but I think storehouse of value and listen, I think millennials have definitely adopted Bitcoin as one of the ways you get that storehouse of value. So, listen, I wouldn't say it should be at this price or that price because I just don't know how you could determine that. But it does strike me it's going to be part of the asset the asset suite for investors for a long time.
Wow. Very interesting. Let me know what you think down below in the comments. Right now, leave a comment. But it seems that this rally is looking like it's going to be largely institutionally driven, I think. Now, I got a question. Why do these institutions care so much about a store of value, storage of value this year? Well, like I said, the Fed had another little press conference yesterday, and they announced that they have no intention of tapering anytime soon. They want inflation. They are trying desperately for inflation, and they're going to let the economy run hot to try and keep jumpstarting it. Listen to the Bank of America, Mark Cabana's reaction to the Fed discussing their monetary policy following a meeting on Wednesday. Watch this. This is what to expect in 2021.
Mark, let's talk about this. If they upgrade forecast and leave policy the same, did the Fed just ease?
I don't know. So they've been very accommodative, and we anticipate that they will remain that way for the foreseeable future. What they are trying to do is that they're trying to convince the market that they will allow the economy to run hot for a period of time, and to run hot until they see inflation move sustainably higher. We thought that Chair Powell's comments yesterday on inflation were very, very telling about the forcibly dovish backdrop that this Fed is going to have. He was talking about psychological impacts that they're trying to influence to convince market participants and participants in the economy that inflation will indeed remain high, or that it can increase over time. And so given the forecasts of an improving growth outlook, the Fed is still going to keep rates on hold, and they are going to remain very dovish and very, very accommodative for quite a long time. But what I thought was very clear, what we thought was very clear yesterday, was this is a Fed that has no intention of tapering anytime soon. There's been a burgeoning market narrative out there that, oh, well, the Fed may have to take away the punch bowl at some point in 2021, or the Fed may need to start tapering at some point in 2021 because inflation is going to improve and the data is going to be better. This is a Fed that right now is very content to push back on that narrative.
Very eye-opening, I think. You tell me what you think. But next piece of news, Coinbase IPO incoming. If you follow us on Twitter, this just got announced this morning. We have confidentially submitted our draft registration, Form S1, with the Securities and Exchange Commission. They are going public next year, and we expect the Form S1 to become effective and for Coinbase to complete a public offering after the SEC completes its review process, subject to market and other conditions. This tweet does not constitute an offer of any securities for sale. So say what you want about Coinbase. Yes, their fees are high. Yes, their exchange crashes at the most inopportune times, but this is going to add huge legitimacy to cryptocurrency from the traditional market. I think this is bullish. This is huge, actually, I think. I do want to take 60 seconds, support the sponsor who supports this video, BlockFi, providing traditional banking services to cryptocurrency investors. And stay with me. As you know, it's a way to put your cryptocurrency to work. If it's going to just sit there, you might want to have it earn some passive interest in the process. Specifically, earn up to 8.6% APY with a BlockFi interest account. This is if you own Bitcoin, Litecoin, Ethereum, or a vast number of stablecoins. With those specifically, you can earn up to 8.6% APY. And right now, if you use the link down below, get up to a $250 crypto bonus with a deposit of $25 or more in crypto. Sign up right now. This won't last forever. I guess what I like about BlockFi is they're pretty straightforward. There's no hidden fees. What you see is what you get. And they do have backing from Morgan Creek Digital, Coinbase Ventures, Winklevoss Capital, some of the biggest custody names in crypto backing the project, which I like. Okay, next piece of altcoin news. Stellar Lumens has expanded their reach in Latin America with a $3 million investment in their coin, in Stellar Lumens, into the Settle network. And the Settle network is a Latin American stablecoin and payment provider. So check this out. This marks the fourth investment this year from the Stellar Development Foundation Enterprise Fund, bringing the total to more than $9.2 million invested in 4 specific companies in 2020. The fund is a venture-style trust for growing the Stellar network and developing partnerships for cross-border payments. It has previously invested in Abra and Satoshi Pay, and they specifically invested Stellar Lumens to help in cross-border payments. The investment of around $3 million will be paid in Lumens XLM and help bolster Settle's current suite of payment tools, which include fiat to crypto on-ramps, payment processing, and merchant gateways. So basically what this means to you as a Stellar Lumens holder, Settle Network will now use Stellar Lumens to help swap into different stablecoins, to help swap from a country's currency into another currency. So big strategic move from Stellar. Pretty interesting. That is the video. My name's Austin. See you tomorrow.